today's video, I'm going to be going over a super simple trading strategy to help you find A+ setups, so you're not gambling your funded accounts and losing them. This one strategy can help you get funded in under 30 days. Let's get started. So in terms of your bias, we're going to keep it super simple. We're going to focus on the daily time frame, and all we're looking out for is a simple liquidity sweep. And in terms of your entry, you would be hopping over to the lower time frame and looking at the hourly, 15 minutes, 5 minutes, and the minutes time frame. Now let's get into the model example before we move over to a chart example. So this is our daily time frame. All of these candles represent the daily candles, and we can see the overall trend in the market in the daily time frame is an uptrend. We can see higher lows, higher highs, so on and so forth being created. Now, what we can see is a shift in market structure. So the first thing we can see is this is our liquidity zone, and that liquidity gets swept. Now, once liquidity gets swept, this candle gets rejected. We need a candle rejection for this trade to be valid. Now, once that candle rejection occurs, we would then drop down to a lower time frame, such as the hourly, 15, 5, or the minutes time frame. And we would do the usual entry model, which is your fair value gap, your market structure shift, and then your entry. So I'm going to just go over an example. So let's say, for example, this is our lower time frame. This would be classed as, let's say, our 15-minute time frame. So I'm just going to mark it out. This represents the 15 minutes. So these are the candles on the 15-minute time frame, and what we can see is a fair value gap. Price taps in, we would put our short position right here, stop loss at these highs, and we would target opposing liquidity right here. Now this represents the hourly time frame or the 15 minutes, any of the lower time frames. And what we can expect is a new daily candle low, so something like this to occur. Let's change the color. So this on the lower time frame would represent this daily candle. Now, if this doesn't make sense, don't worry, as when I go over the live example on the charts, they should make a lot more sense. Now I'm going to show you the bearish example before we move over to the chart example. So on the bearish example, we can see the overall market structure. It's a bearish overall, lower lows, lower highs, lower lows, lower high. And then what we can see is liquidity once again being swept. And once that liquidity was swept, we had a candle rejection towards the upside, which indicates market is likely to continue moving towards the upside. And what would we target? We could target this high. We could target even this high. Now, I hope this strategy made sense so far. If it didn't, be sure to watch the video till the end, as I'll be going over a chart example. Now, just before we move over to the chart example, our team made just over $10,000 this month using our AI trading bot. I'll go ahead and show you guys the results. All of it's been documented on our Telegram channel. There's full transparency, so you can see we received a $10,800 payout on the 15th of May. And that is after FTMO's 20% profit split. You can see this is the account. We run the bot for 6 days out of 2 weeks, as the payouts do every 2 weeks. You can see this is the account. $13,552 was made. If I skip through, you can see when we're on the monthly time frame, and let's go to the bottom. $13,552 was made. After the 20% split, that's $10,800. And every single one of the days that we ran the bot, we documented it. So be sure to check it out. If you're looking to get access, hit the link below to find out more. Now we're going to be moving over to the chart example. We are now on the live chart example with NAS 100. Let's get started. So we can see the overall market trend over here. We're in a constant uptrend, higher lows, higher highs, higher lows, higher highs, so on and so forth. Until what happened, we see a market structure shift, and you can see price tanked. Now, what are we waiting for before we take our entry? So the first thing I can see is a liquidity zone right here, and what we're waiting for is market to simply come ahead and take out this liquidity level. So let's see what happens. So there we go, we're getting close to taking out liquidity, but not just yet. So you can see that we had a candle rejection and the candle closed below the liquidity level. So we already have a good indication that the market is likely to continue moving towards the downside. Now what we're going to do is target our liquidity levels. So what level do I want my TP to be? So we can target TP right here, and we can also target TP down here. Now obviously you can't take the entry from the daily time frame. Well, you can, but I wouldn't recommend it. So we're going to drop down to the hourly time frame, and once we've done that, we're going to spot our fair value gap, our market structure shift, etc. before taking the trade. So let's see how the hourly plays out before we take any entries. So already I can spot a fair value gap, so I'm most likely going to enter off of this fair value gap right here. So let's go ahead and mark this out. This is our fair value gap. I'm going to enter as soon as we tap in. We've not yet tapped in, and we've tapped in. So I'm going to put my short position at the fair value gap, stop loss above these highs. So obviously this trade would be deemed as invalid if price were to go above this liquidity level. Hence why I put my stop loss a bit higher. You could also put your stop loss down here, but I would prefer to put it at an high just to be safe. And you can simply target a 1 to 2. So if you want to be safe, you want to get your quick profits in and out 1 to 2. That's more than enough. But if you're looking to target a low, you could target this low right here. You could target this low down here. And your final TP, I wouldn't go above this, but it would be this low right here, which would give you a 1 to 4 risk to reward. So I'm just going to target this low to be safe, which is a 1 to 3 risk to reward, almost a 1 to 4. And let's speed this up and see how this trade plays out. Okay, we're flowing in some profit, back into drawdown, and back into profit again. I'm just going to extend this PNL out, continue extending it, and just like that we have hit and take profit. Let's just continue to see what happens to price. Will it go down more or not? And as you guys can see, the full TP has been hit, so you could have held this trade to the final liquidity zone and you still would have hit and take profit, and that would have given you a 1 to 4 risk to reward. I hope this video helped. If you have any questions or unsure about anything, leave it down in the comments or send me a message on Telegram, link in bio. Yeah, and once again guys, do be sure to go ahead and check out our Telegram channel, as we've literally made over 10 grand with our AI trading bot, completely hands-free. So if you are interested in getting started with our AI trading bot, I would highly recommend you check us out in the description down below. And it's not any of these high frequency trading prop firm, it's with a high quality prop firm like FTMO. They are well established, so you know you'll get paid out at the end of the month. And if you're not sure whether this AI trading bot is the right fit for you, you can book a free 30-minute call with one of our team members completely for free, no questions asked, whether you're interested in the bot or not, or just want to find out information in general. So yeah, hope you guys enjoyed this video once again, and I'll see you in the next one.